Hey everybody, it is time for this week's market snapshot. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes, plus a bonus. The August 2025 numbers are in. So we're going to take a deep dive into what happened in August of 2025 versus August of 2024. Here we go. Okay, so I'm always excited to do this particular snapshot each month because we get to look at the 7-day statistics, which tells us exactly what's going on in the market real time. We're looking at the number of buyers that went under contract in the last 7 days and the number of new properties that came on the market. So we have real-time supply versus real-time demand. Supply being inventory, demand being buyers. So that tells us where the market falls in with regards to seller's market, normal market, buyer's market, what's going on there. So that gives us real-time data. And then when we get to look at how August or the previous month went on that month versus the year before, we get to see what the trend is of the market. So more of a bird's eye view so we can see where the market's going. So real time and then where everything is going. So these are always fun market reports to do. So let's just go ahead and dive into the numbers and show you exactly what's going on. Now these numbers are going to be a little bit skewed, especially for the 7-day, specifically for the 7-day market report, because this includes Labor Day weekend. So a lot of people were traveling. So this isn't going to give us an accurate representation of where the market's going to be going next week because people are back, they're in school, things have settled down. So we're seeing an increase in buyer activity, both on our listings, we're seeing more showing requests, and from our buyers, we're seeing more buyers starting to request showings. When you combine that with the fact that the interest rates have done a significant drop in the last couple days, we expect to see that buyer activity to continue. But these stats are including Labor Day weekend in the mix, so it's going to be skewed just a little bit. So you'll see that buyer activity dropped, and again, it's part of Labor Day weekend. And keep in mind, these stats were pulled on Wednesday, September, what is today, 6th, Wednesday, September like 3rd or 4th, something like that, maybe 2nd. And the Labor Day weekend was the weekend before. So the stats were pulled and included that Labor Day weekend. So that's what I mean by it being included. So buyer activity was significantly lower. Inventory dropped down just a little bit. The trend of inventory has been that inventory is staying like right in this area. Buyer activity has been trending downwards, but then it took a big bump right before Labor Day weekend and then it came back down. So where are we versus last year just on this aspect? So we're sitting right here. If we come over here, we are higher in both buyer activity and inventory than where we were in Labor Day of last year. So that's something that's interesting. The market is more busy this year than it was Labor Day of last year. With regards to the strength of the seller's market though, because the buyer activity decreased so much, it approached that gap it closed that gap with the inventory. So supply and demand were pretty much equal. So you can see that we had a pretty normal market this past 7 days. Again, since Monday, or since about Tuesday or Wednesday after Labor Day weekend, we've seen buyer activity starting to pick up. So as we come into next week's market report, we will likely see more contracts, more demand. We'll have to see if there was an increase in inventory that went along with that. So that's why you want to stay tuned for next week. So basically, as I've been saying pretty regularly over the last several weeks, this is a fantastic time for buyers because let's look at the contract trends and I'll tell you exactly why. Prices are not coming down, but buyers are able to get their protections in the contracts. So if you look at the contract price, you can see that 26% of the properties went above asking price, 29% went at asking price. So basically 55% of the properties went at or above the list price. If you go down here, you can see 0 to 7 days was 17% of the properties. So properties are sitting a little bit longer. We're seeing that 0 to 7 day mark starting to shrink. 8 to 21 days was about 26%. But here's what's interesting. As we're seeing the property sit a little bit longer, you can see that this equals 42% that sold within 0 to 21 days. But you'll see here that we have 55% that sold at or above listing price. So that's a 13% delta. So that means that 13% of the properties that went over 22 days still sold at or above listing price. So that kind of tells me that the market is starting to get used to longer days on market. The market's starting to get used to us kind of moving back into a more normal pace of a market. So as far as like cash versus financing, again, 90% was financed, 10% cash. But the next slide is going to be why it's a good opportunity for buyers to buy right now, because you can actually get your contingencies. Finance contingencies, 78% of the buyers got finance contingencies in contracts in the last 7 days. Appraisal contingencies, 74%. Finance and appraisal have been sitting right around that 73 to 78% mark for several weeks now. Inspection contingencies last week, they were actually up, where over 60% of the buyers had gotten inspection contingencies as a part of the contract. This week it's back down to where it's been sitting for the last several weeks, which is around 50%. Now the important thing on the inspection contingency is this: just because only half of the buyers got the inspection contingency in the contract, that doesn't mean that the other half didn't get an inspection contingency. There are a lot of sellers that are a lot more open now to allow pre-offer inspections, and that's what a lot of buyers are doing. In fact, I was at a showing today. We walked into the showing and there's a pre-offer inspection happening. So buyers are able to get their inspections when they're willing to do it, and do it quickly in a pre-offer situation, even if it's a competitive situation. So this page right here is why I say it's a good time for buyers to buy, because the competition is lower, so you're able to get these contingencies. Whereas if you're competing against 5 to 10 offers, you're not going to get your contingencies because somebody's going to waive their contingencies. With the interest rates looking to come down over the next next several months as we go into 2026, we only expect to see the buyer activity increase, because we saw a significant drop in interest rates just the last couple of days. So just be prepared for that, buyers. If you're thinking about buying, go do it now. Get under contract now before those rates start coming down. Okay, so sellers, what this means for you right now is you have to be very diligent about your property. You have to present your property in its best light. Make sure your light bulbs all match. Make sure all light bulbs are working. Stage the property, or at least prepare it appropriately. If there's work that needs to be done on the property, get it done. Get with a contractor that'll take payment at settlement. If you're not willing to do that, then you've got to be willing to adjust the price appropriately, because buyers have choices and they're still willing to pay top dollar, but they are going to pay top dollar for top properties, not just to get into any property. You cannot just throw a property on the market and expect to get top dollar unless you make it a top dollar property. Okay, I hope that makes sense. If you're a buyer or a seller and you need advice on your personal situation, feel free to reach out to Kelly and me at 703-783-2143. Okay, so that's the 7-day market report. Now I want to dive into what has happened August of 2025 versus August of 2024, so we get that bird's eye view of what the market is doing. Okay, so here we are. This is the month over month review, so that we can see the trend of where the market's going, and then we can make decisions based on that and kind of expectations about where things are going. Is it a buyer's market? Is it a seller's market? What is going on? Let's dive in. So the number of new listings in August of 2025 versus August of 2024 was down 2%. You can see it was 1,096 in 2025, 1,018 or 1,118 in 2024. So a difference about 22 properties. So it's only about 2%. But the important thing is we've been seeing a trend where the inventory has been higher than it was in the previous year. So this one kind of slowed down a little bit. So what does that mean? Let's keep on looking. Number of sales. 2025 was 1038, 2024 1041. Now what's interesting about this is sales were flat, but inventory was down a little bit. So even though inventory or supply went down, demand was still here. That creates a little bit of a gap, so that shows that that seller's market is still hanging in there. We're not moving into a buyer's market. At least that's not where we're trending towards. Days on market. Now what we are trending towards is we're seeing that properties are staying on the market longer, which I mentioned on the market snapshot for this week. You can see August of 2025, 25 days on market versus August of 2024 was 19 days on market. So that's a significant increase. Properties are taking a little bit longer to sell, but they're still going at that asking price or above. Months of inventory. So this is our absorption rate. This is one of the best indicators of, are we in a seller's market? Are we in a buyer's market? Where are we trending towards? So what this means is if you took the current amount of inventory that was on the market and the current rate at which they were selling, how many months would it take for all of the properties to sell and be gone? A normal market is generally accepted to be somewhere between 5 and 6 months of inventory. A seller's market is anything below that 5 months of inventory. A buyer's market is anything above that 6 months of inventory. So you can see for August of 2025, we were at 3 months of inventory. It is a softer seller's market than it was August of 2024 because we were at 2 months inventory, but it's still a seller's market. And the reason I keep mentioning it's still a seller's market is because that indicates that prices will not be softening anytime soon. They are not trending towards softening, and they will likely not be softening anytime soon. Now, if we look at median sales price, this backs up what I was just saying. You can see that in August of 2024, August median sales price was $741,000. August of 2025 was $760,000. So it's up 2.5%. Versus August of 2024. So the property values are still increasing. For those of you who are sitting back and kind of waiting for a big crash, I want to show you this graph. And I've showed this to you before, but I just kind of want to run through it again. This is the last, since 1942, that's what, 81 years. How many years were down, how many years were up, how many years was there a loss, neutral, and so on. So since 1940, you can see that there were 73 years that were positive. Now, it might have only been positive 1% or 0.1% or something like that, but the year finished out being positive year over year. There were only 7 years that were negative. Those 7 years were in the 1990s, from 1991 to 1992. That was 1% and 0%. Now, what's important about that, 1% to 0%, if you are waiting for a market crash to happen, and let's say it does drop 1%, it's showing no indication of that, but let's say it does drop 1%. Well, if you've been waiting for even a year and values have gone up 3%, then you've just lost 2% in the delta. So it's something to really keep in mind. So in the 1990s, we were at a loss here. 2000s, this was the Great Recession, 5% in 2007, 2008, 2009, 2010, and 2011. So that was a significant drop in property values. But that drop, that Great Recession, was caused by the real estate industry. It was caused by subprime lending and all the things that were going on at that time. Since that drop, there have been numerous safety protocols put into place where all of these properties that have sold since then have equity, they are legitimate buyers, and it's not the same mechanics as it was back then. So the whole point in showing you this is, if you are sitting here and you're waiting for values to drop, the odds of history are not in your favor. Now, nobody can predict the future. I'm not sitting here and telling you that prices are not going to come down. I'm just telling you that the trends of what the market is doing, prices are still trending up, not at 10 to 15% like they were during COVID, but they're still trending up. History says that trying to time the market and look for a crash to buy a property is not very much in your favor. And what ends up happening is I see a lot of buyers that are sitting and waiting. For example, there are a lot of buyers right now that are sitting and waiting for interest rates to come down. Well, they're starting to come down. As soon as those interest rates start coming down so that people can save a little bit on their mortgage, there's going to be bidding wars on properties, so you're going to pay more for the properties. So the saying is the best time to get in real estate was always 10 years ago. The second best time to get in real estate is today. And it's time in the market, it's not timing the market. So if you're considering buying, I would consider doing it sooner rather than later, just so you're not getting into those bidding wars should they come when interest rates start coming down. Hope that makes sense. If you have any questions, any disagreements, any comments, please let me know. I'm happy to review articles that you guys see that say things that I'm not saying or say things against what I'm saying. Kelly and I gladly look at these articles. We'll run the numbers. We'll see what we may be missing. But based on what I am seeing, the market still appears strong, especially here in the DMV area. This is not nationwide. This is the DMV area. The market still feels strong, and it's still a great time to enter into the real estate market. Give us a call if you have any questions, 703-783-2143, and we will see you guys next time.